Hello and welcome to your Monday Futures Market Outlook for July 26, 2010. This is Patrick Serasna. For those of you that have not had an opportunity to try out eminisource.com, 30-day complimentary memberships are available on the homepage. As always, we start off with a weekly chart of the S&P 500 going back 3 decades, and we plot an 80-week moving average on there. It does a very good job to depict the bull and bear market cycles that the market has gone through. Many months ago, we crossed bullishly above that 80-week moving average, asking the question as to whether or not this was the beginning of a new multi-year bull market. At this stage, we certainly don't want to rule that out, but there are a couple of scenarios that we're playing through. The first circumstance is that we go through this multi-month corrective pattern, probably staying weak until even September, October of this year, making some short-term bottoms, give or take around the 1,000 level. Once we've seen all of that finish playing itself out, we would turn around and become bullish for the remainder of the year. But the one thing that we certainly at this point cannot rule out, and one of the things that drives our overall thesis, is that if this entire rally up until now, since that March 2009 low, was just a secondary retracement or a bounce off of the bear market, then we at this stage cannot rule out the idea that the market has another full sell cycle to go on the downside. So before we decide which of these scenarios we're going to favor, we want to see the price action into the August, September, October period to determine what is a likely outcome. So when we take a closer look at that by looking at the daily charts on the E-mini S&P 500, what we have here was the market that is, at least last week, has gravitated higher. We were talking about last week this 1100 level on the futures, suggesting that that's an important level. When we were seeing that selling coming in last week, we were saying that so long as that 1040, 1050 level held, that we would be looking for the market to gravitate higher to retest some of those previous highs we put in up in that 1120 area. At this point, we think that so long as the bulls can push one solid push above this 1100 level, it would immediately open the window for a good test up into this area. As a matter of fact, if we spend a week or 2 weeks into middle of August, working our way up into the zone and then bouncing around would be very much a natural event, and we would see that come up there and find a huge overhead resistance. But we still favor the idea that the markets will weaken into the late summer and into the fall. So at this point, this is only very short-term bullishness. Eventually, we're going to be looking for the markets to work their way back down, and we're still our summer to fall target at minimum is down in the 960 to 1,000 area on the downside of the S&P, and that's where we're going to start looking for the idea of a bigger picture market bottom potentially. So just to review our key points, our thesis since January 2008 has been that we're in a secular bear market, and we will not change that thesis until we see the extent of the selling that we are in the current cycle. So when this sell-off actually finishes, if we find very good basing in the 950 to 1,000 level, we will start to consider a bullish thesis. Support held last week at that 1050 area. We're looking for it to deliver a rally as high as the 1130, even 1150 areas on the upside. But we again continue to be skeptical about the sustainability of any rally into the fall, and it's important to stay conservative in your investment portfolios. Next year, I want to take a look at the E-mini NASDAQ 100, and we again are seeing similar circumstances. We in the S&P, very naturally, we could see a rally up into 1100, even as high as 1160 or 70 on the upside. But more or less, we're looking for some sort of a legitimate summer high to come in somewhere in this blue box, and then the whole NASDAQ to roll over again, just like the S&P, into the fall. Next year, I want to take a look at U.S. dollar index futures. What we see here is some very good support coming in at this 82, 82.50 area. At this point, So long as the euro continues to struggle around the 130 level, we think that the dollar index will find some important support lines in here if it does, and if we see the euro reversing off of these levels, and subsequently the dollar index should start to reverse higher and maybe make an attempt toward that 85.50 to 86 level on the upside. But we're going to be watching the support line very, very carefully. Next year, I want to take a look at gold futures, and we continue to see gold kind of fighting and struggling at these levels. It would be very unnatural for gold to be going into some sort of very robust rally here without there being a bigger picture catalyst such as economic crisis or some other type of a thing to drive new buyers into this market. Overall, gold is flagging again and could potentially see another attempt at that 1170 support line down below. If it does go down there and break into that 1170, we could see a short-term breakdown that could see 1160 or even 1140 or lower on the downside before we see snapbacks. In the bigger picture, there are a number of scenarios that could end up turning gold bullish, but we still think that gold is right now in that consolidation phase, and we'll be watching to see where it does finish its consolidation at. Next year, I want to take a look at the E-mini crude oil futures contracts, and the 78 to 80 focal point continues to maintain resistance on the upside. Now, from a technical perspective, it actually is quite possible that we have an attempt to break above the 80 level. We might see a very quick snap up into this 80 to 82 area and then immediately return back down below. So we're going to be watching for this little prairie dog move that could pop its head above that level and then come back down. But overall, we still believe that crude oil is going to finish this consolidation and roll downwards, and eventually we're going to be looking for crude oil to work its way down into the low 60s, where we expect some sort of short-term lows to come in at crude. Finally, I want to look at the 10-year Treasury notes, and we had a bullish breakout and continue to have bullish trend on the upside on the Treasury notes. We just complete the minimum downside target for where we were looking for on the upside. At this stage, we see a few reversal days, primarily driven by stronger markets in general. So long as the market is complacently moving higher, it'll be hard to maybe see the 10-year Treasury notes get really motivated underneath there. We may in fact see a little bit more further consolidation while the markets finish off what they're doing, and then if and when we see the markets begin a little bit more fearful selling again, then we could see a motivated move in the 10-year Treasury notes to get up into that 124 to 126 area on the upside. That was your Monday Futures Market Outlook. Thank you for joining me.